Welcome to our house, the House of Fi. At the House of Fi, we are all about achieving financial independence for families. Wherever you are in your financial independence journey, we want our house to be a place where you can learn and get inspired. If you are a parent on the journey to Fi, then come on in. We're glad that you're here. Here are your hosts, Wendy and Tamika.
Well, welcome back, House of Fi family. This is one of your co-hosts, Wendy, and also with me is my fabulous co-host, Tamika.
Oh, hi, Wendy. Hi, everybody.
Well, today we are having Jackie Cummings Koski on the show, and Jackie is a certified educator in personal finance dedicated to raising America's financial IQ. She is author of the book Money Letters to My Daughter, which is a series of educational and entertaining letters written to her teenage daughter about all things dealing with money and personal finance. But what is really exciting about Jackie is she's also earned the distinction of being a single working mom who has achieved millionaire status. And if that were not inspiring enough, she accomplished this without a six-figure salary. And so one of the recurring messages that we have always hoped to convey on our show and to our listeners is that financial independence is for everyone. And if there were one person who exemplifies this, it is Jackie. Welcome to the show, Jackie.
Wow. Thank you, Wendy. I am so glad to be talking to you guys today. And hi, Tamika.
Hi, Jackie.
Well, why don't I gave our audience just a little bit about you. Why don't you tell us in your own words who you are and kind of just a little bit about your story?
Well, thank you, Wendy. And those are very, very kind words. So I guess my story kind of goes back to childhood, like most people. I was raised by a single dad with 6 kids. We grew up in the Southeast. He was a factory worker, and sometimes he worked more than one job, trying to support our family. He didn't even have a high school diploma, but he worked his butt off, and he knew how to stretch a dollar. He actually died of cancer at about age 49, which seems so young now because I'm close to that age. And that was about 2 months before I graduated from high school. Growing up so poor, we barely made ends meet. And I just decided I didn't want to be in poverty like that when I grew up, and I got my own family. So I decided to go to college. I worked full time the entire time. I had a little help from scholarships and grants. But other than that, I really didn't have any other financial support. Towards the end, I did take a small student loan, but it really wasn't that much. But I was just going off of what I was taught, work hard and, pay your bills as you go. And that's what I did. So once I got done with college, I was just thrilled to even get through college, but it was tough because I had to work the whole time and I really didn't get to focus on my classes and my studying like I probably should have. So when I got my degree, I was just thrilled to know that your GPA was not put on the certificate. I was pretty good academically, especially in high school, but it just got really tough trying to work full time. Shortly after I got done with college, I got married. I had a daughter, and we were together for about 10 years before we were divorced. And that was really the time that I realized that I needed to change some things. At the time of our divorce, they split up your retirement money. And I had about $20,000 in my 401k, thought that was pretty good. At this time, my husband and I made about the same money and had about the same match from our employer. Well, up against my $20,000, his account had $120,000 in it. So, of course, that made me think, why on earth would he be able to have $100,000 more in his retirement account? So that was just a huge wake-up call for me. And I vowed from that moment on that I needed to learn about investing, my finances, and I made some changes. Some of those changes were I started putting money in my IRA, putting money in my 401k more than what I had, so I upped that. And I also joined an investment club that I'm actually still a part of. A few years down the road, my daughter, it was really starting to dawn on me that I needed to start teaching her some things about money and personal finance. She was 9 years old at the time that me and her dad got divorced, and it was super scary. But once I sort of healed myself emotionally and financially, really, that is when I started making even more changes. Because when I was thinking about my daughter, we probably all know that we'll do for our kids what we won't do for ourselves. So it was mainly her I was thinking about. And so that's what started me to write the book. It's called Money Letters to My Daughter. And I was always a writer. I was good at writing. My minor was in journalism and I enjoyed it. So I thought this was the best way to share everything that I've learned about personal finance and money. And it probably took me about 2.5 years. Finally got it done, got it published. Yay, that was a win. And my goal was, I started writing it when she was 14, and my goal was to have it done for her by the time she graduated from high school. Probably right around the time she graduated, that was when I sort of had my financial independence epiphany. It's really a funny story how this came about, because I had an accident while I was volunteering in a work activity. We're outside clearing bushes, doing stuff I really don't like to do, but I'm a team player. I broke my ankle. I didn't just pull a ligament or fracture it, it broke. And so I ended up having to have surgery, and I was off work for about 3 months on short-term disability. So during that time, I obviously was able to do a lot of reading, listen to a lot of podcasts, which is kind of the way I really love to get information. That's when I started reading about some of these FIRE people that were retiring so early. And I am a skeptic by nature. And I'm like, this is not true. It's unbelievable. So I kept digging and digging, because I guess the one good thing I had was curiosity. And as I was digging, I actually proved myself wrong and discovered that this really is possible. And I'm pretty close there. I was very attracted to the FIRE community and financial independence. And I started running my own numbers. Doing a net worth statement is probably one of the most valuable things that I did, because I finally laid out all of my numbers, all of my assets, minus any debt I had, which I barely had any except my home. And it just made sense. One of my favorite FIRE bloggers, even to this day, is Mad Scientist. So I think he was the one that finally convinced me. I was really ready to go at that point. I started maxing out my 401k, maxing out my Roth IRA, maxing out the family contributions of my health savings account. And I even started saving after tax. But I still lived pretty good, but it really didn't take much to max these things out. I just didn't know. So that gave me about a 40 to 50% savings rate. And this just really supersized my savings. So I hit my financial independence mark last year, and that's roughly about 25 times my annual expenses. And I was going to leave corporate America. This was going to be my year, but I kind of have this one more year syndrome. So next year, I do plan on retiring from corporate America, probably about 11 months from now. I'll still be in my 40s, and it's just a great feeling to be at this point, considering how I grew up. So that's pretty much my story.
That's so incredible, Jackie. I mean, it's phenomenal that number one, you were able to do it on one salary. Number two, that you were a working mom. And then number three, that you really weren't earning much more than what average salaries end up being. Did you have to make any cuts to your budget or anything like that? Or were you just frugal by nature because of your upbringing?
I think you hit the nail on the head. I was just very smart with money and knew how to stretch a dollar from how I was brought up. My dad did it out of necessity, and that was just a natural thing for me. So I really didn't have to make many changes as far as how me and my daughter lived. And that's the beauty of it. I think sometimes we do see the people that are, highlighted in the FIRE community about the extreme frugality and minimalism. And I really don't have any of those besides what I was raised to do. And I just don't think that played into it that much. I was just always pretty wise with how I spent my money.
You mentioned the Mad Scientist, and I know that you're somewhat of an HSA or health savings account expert, and that you actually have used that as one vehicle to save a good chunk of your money, over $100,000. Can we talk a little bit about what the value of that type of account is? I know that the Mad Scientist has written a lot about it, and I've heard you talk about it before, and I'm sure our guests need to know some more education about the topic.
Absolutely. So I started saving in my health savings account when my company first introduced them back in 2008. It was years later, that I read that Mad Scientist article, which is called the HSA, the Ultimate Retirement Account. And boy, that got me going. So every year since 2008, I maxed out the family contribution. And I guess I'll mention that sometimes is a confusing part for people. You can put in the family contribution even if it's just you and your child. It does not have to be you and a spouse, just you and one other person. So this year, that amount is $6,900, and for 2019 is $7,000. And my strategy was that I was going to max it out every year. I invested it as soon as I was able to. My provider, you have to have like $2,000 in liquid cash, but all the rest you can invest. So I love the fact that it rolled over from year to year. I could invest it. I never really thought about spending it because between me and my daughter, we are very low consumers of healthcare. So it just made sense for us. And if you do the math from 2008 to 2018, the stock market has been roaring. And I had all of my money just automatically go into the Vanguard Total Stock Market Fund. And it's just been growing and growing. And now, like you said, it's worth over $100,000. So that really gives me a peace of mind going into retirement because I've saved some receipts that I can obviously reimburse myself at any time, but it'll be helpful when I get on COBRA because I can pay my COBRA premiums out of my health savings account. And there's just so many more benefits to that account. And that's why it's really been a big part of my FI plan.
Can you go into just a little bit more, Jackie, about how does one access that money? So let's say you are so you've hit your FI number, you're ready to actually take the leap and fully retire, so you're not in your current job. And so now you have these accounts and they're sitting there, and one of them is your HSA. How do you then get to the money?
Okay, well, it's kind of treated maybe like a retirement account or like a Roth IRA, where you could either connect your checking account to it and you get the money out that way. It's going to depend on your provider, but any way to be able to withdraw money out of any other type of investment account, it would be the same way. Now, the kicker would be that once I file my taxes, I do need to have the proper documentation when I'm ready to get it, especially when reimbursing myself for expenses that I might have had 10 or 15 years ago. I would need to keep those receipts with my taxes for that year.
I used to be an accountant, and even when I saw this, I think my ex-husband had access to one of these at work, and I did not recognize the tax benefits on all different past, present, future perspectives. Can you just talk? I mean, I don't think we used it at the time, but whether or not we did, what are the tax benefits, and explain how wonderful that is to have these tax benefits.
First of all, in order to even have a health savings account, you do have to be on a qualified high deductible plan. Okay, so not everyone is eligible, although myself as an advocate, I think that it should be available to anyone regardless of the healthcare plan that they're on. But right now, where the law reads, you do have to have a high deductible plan that is qualified based on the IRS rules. So tax benefits are amazing. Tax-free going in, tax-free growth, and tax-free coming out. There's no other account where you get all three tax benefits. And on top of that, there's a bonus. If you are making your contributions through payroll deduction, you don't pay FICA tax or payroll taxes. So you just cannot beat it. And to be able to roll this money over year after year, to let it grow, it is just awesome for anyone trying to reach financial independence. And since many of the people in in the FIRE movement are millennials, let's say under the age of 40, generally they're going to be very healthy people. And they would want to go with the cheapest plan anyway. So I guess another bonus with the health savings accounts is that the high deductible plans are typically much, much cheaper on the premiums. Most of us are either going through or about to go through open enrollment. And when I did that this year, I, of course, went to the lowest cost plan where I could still have a health savings account. Well, that is costing me and my daughter roughly about $90 a month. And when I looked at like a traditional PPO plan, the cost was about 10 times more for the premiums. So I would rather pay the lower premium up front because that's a sunk cost and take the difference and put it in my health savings account. So that's just my thoughts on it. And there's many more benefits, but those are probably some of the biggest ones that might benefit someone on the FIRE path.
This is just awesome information. Thank you so much. I can link to some documents and I can definitely put some more information about the IRS publications for the HSA account for those of you who maybe have your own side business and are using one of these high deductible accounts or have a company that you work for that offers it. And it's definitely important to reiterate all the positive benefits and to encourage anyone to take a look into it. I definitely had a connection with you when you talked about your divorce as an awakening for your FI journey. I too went through a divorce that sounded very similar to yours, where I was always a saver. And when we divorced, he had way more in his accounts than I did because I took on all of the costs for our daughter. So I just wanted to ask you if there's anything that you would recommend to women or men in relationships in terms of not having that type of experience where if something does go wrong, your accounts are so out of sync.
That is a very tough time. You talk to any divorced person and it just shakes your whole life up. So I would say this advice, honestly, is for any married couple or anyone that might be in the process or on the other side of divorce. There's no reason why the two of you should not be sitting down and looking at your accounts as a whole. It does not mean that you need to combine every single account, but you should have a 360 view of your financial life as a couple, separate accounts, combined accounts, because there's other things that can happen in the marriage. You could, one of the spouses could die or pass away. One could get injured. And honestly, if I decide to get married again or have a life partner, that is something that's really important to me because I would be probably more concerned for my partner because if something happened to me, I don't want them to be stressed out and not knowing where everything is and what we have. So that's probably the best advice I could pass on.
I completely agree with you. And it also takes me to thinking about your daughter, because over the last couple of weeks when we've been interviewing people, we've started to see this special bond that's there between a single mom and an only child. The amount of guidance and sharing that's done when it's you and them. And it's very inspirational to me because I try to have those same connections and those deeper connections. And I've already been inspired to do a little bit more when it comes to teaching my kids. So I guess I just want to talk a little bit about your daughter. You wrote this book for her. What do you do to inspire her and to guide her so that you're sure that she follows in your footsteps?
Oh, well, thank you. And that is a very, very special bond that I have with my daughter. And I'm happy that it worked out that way because honestly, when they're teenagers, it doesn't seem so optimistic. So she is 23. She's 23 now, and I get to see all the fruits of my labor. And you never know which lessons they really got. I wrote the book, specifically for her, but I don't know how much of it she would actually take to heart. And now to be able to see all the things that I try to teach her come to fruition, that means a lot. So she did actually intern at the company that I work for a couple of years. And that's when we started like going to lunch at least once a week. And now that she is done with interning there, she works a great full-time job in her field. I try to have dinner with her at least once a week or maybe every other week. She gets busy sometimes, you know how they are. So first of all, it's really nice when she will text me and say, do you want to do dinner next week? It used to always be me.
Aww.
So when I see her and when we talk, I really try to shut up and let her do most of the talking, because some of these things she's telling me that she's learned, I know this is because of something that I have taught her, and her curiosity is just so wonderful to see as she not necessarily follows in my footsteps, but as she starts thinking on her own and what she wants her life to look like. So one of the things that really has stuck with me is when we were first going to dinner, and I would tell her she could pick the place. And you guys know how important that is to have this time with her. So I don't even put a price tag on it. When the check came the first time, she's like, Mom, I don't want you to pay for my meal. And I'm thinking, oh my gosh, she did get the lesson. So I just always taught her that, you know, no one owes her anything, and don't expect anyone to give you anything. And it's like my asterisk was, but I'm mom. But I understood what she was trying to do. And I explained to her how important it was, the time that we had together, and we compromised. So I said, okay, what if I pay for the meal and you pick up the tip and you put the tip there? So that worked out, but it was so heartwarming for me to hear her say that, because I have so many friends and know so many people that are still supporting their child when they're 26 years old. And that's something that I just, didn't want her to be. So she's quite the independent woman, and I am proud of her whenever we get together.
Jackie, so you did mention that now she's working a full-time job and all of that. Did you sit down with her and talk with her about her, I'm assuming it has retirement benefits since it's a full-time job, or maybe that's wrong?
She's almost there to earn a permanent status. But yes, you know what's the good part is that most of the things now, she is one step ahead of me, and she's asking me. So right now she's on my insurance, and I get insurance for dirt cheap. I pay like $20 more a month to have her on my insurance. So I kind of want to save her a few bucks and not have her have the health insurance. But she's already asking me, Mom, what happens when I can't be on your insurance anymore? So that's the teachable moment. And then something came up the other day. She has a touch of asthma, and she had to get this new medication that the doctor prescribed. Well, she goes to the pharmacist, and I'm on a high deductible plan, but they didn't even have an updated insurance card. And they told her one of the prescriptions was going to be $1,200 because there's no generic equivalent.
Oh,
and she freaked out, and she didn't want to call Mom. She got scared. And when she called me the next day, she told me about it. I said, Amber, why didn't you let me know? So I said, please let me help. I have to beg, to help her. But I said, let me make sure they have the card, which they did. That brought it down to $350. And then I went on, and in case your listeners don't know, or you guys don't know, anytime there is a medication, usually there's a 10-year lockup period for these pharmaceutical companies, because they do a lot of testing and there's a lot of money they lay out up front. Usually about a 10-year or so period, there can be no generics. Okay. So any drug that doesn't have a generic equivalent, it's going to be very, very expensive. So what some of these pharmaceutical companies do, most of them, if you go to their website, they'll have a huge coupon or a huge discount that you can get on that drug. So in this case, it was $200. So I got it down to about $100 for this medication, but it's my baby. So of course we're going to get it no matter what. But of course I have to find the cheapest way to do it. So I explained all this to her, and you should have seen her eyes open like, oh my gosh, how am I supposed to know that, Mom? And I'm like, well, most people don't. And then she's like, Mom, what if it's somebody that couldn't afford, she was working herself into a frenzy about what people do when they can't afford it. And this is not right. This is not fair. And I'm like, honey, it is a long story to tell you. In America. And I said, when you're feeling better, we'll go over it, because that's at least a 5-part series. But it's just so interesting
Right.
to have her asking these questions about those types of things.
I think what I love most about that is that, obviously you've raised her to be conscientious, that others are not necessarily in the same situation that she is, and that she does have, in some sense, a little bit of privilege, but she's still so empathetic to other people, and that, oh my gosh, recognizing that I have my mom, I have the ability to pay for this, and what about someone else? Beautiful.
Oh, yeah. And you mentioned, yeah, she is privileged, but she does have empathy. And growing up the way that I did and looking at how she's being raised, oh, she has got it great. And I probably mentioned it more than once, how I had it growing up. So I think that she does appreciate what she has. And being parents, we want our kids to have a better life than we did. We want them to be richer, smarter, better. And so I want to give her that. But then on the flip side, we worry about spoiling our kids, giving them too much,
Right.
making them, we don't want to make them feel like someone owes them something and that she has some right to have this. So it's a delicate balance between the two.
It is a delicate balance. Just this week, I was having a conversation with my daughter about the very same thing. My daughter is very close in age to your daughter. She's 22. But we were having the same discussions. We were having a disagreement about something that she wanted to do. And I had to say, hold on just a second. You're expecting something that is not an entitlement. This is not something that when I was 22 and putting myself through college that I received. So I know you feel like you deserve this thing, but you don't deserve anything, And so just having to do a little bit of a break check on that and say, hold on here. So how has she received your book? Have you talked to her about the book?
Yes. So I started writing the book when she was about 14. And she actually read it before she thought she read it. So as I was writing it, I would hand her some chapters or just some letters. She doesn't like to spend too much time reading. She would give me feedback on each of the letters. So before the book was even published, she read the whole book. So when she was in high school and she was a teenager, it wasn't that great. And it was tough when I don't know how it was with your 22-year-old, but the teenage years to me were the toughest years as a mother.
By far.
Yeah, I felt like she wasn't getting any of it. But now that she's a little bit older, we talk about some of those things. She really picked up a lot of stuff, like things about credit, a whole litany of personal finance topic. Investing, she seemed to really enjoy that, and that stuck with her. So many of the letters in the book, it definitely stuck with her. And I'm just thrilled that she is, I guess, embracing some of the takeaways from the book.
And so is your book written specifically for maybe the 14-year-old, the 16-year-old, or is your audience everyone?
The audience is everyone, and here's why. Since I wrote the book, I do a lot of financial literacy workshops, presentations, and that's sort of my greatest body of work right now. And I noticed that even if you are younger, let's say 14, and about the youngest group I've done has been middle school age, but I do adults, I do high schools, I do colleges. So the main thing I have recognized is that the 18-year-old knows just about as much about some of these financial topics as the adults. So what I typically do is if I'm talking with parents, I'll say, well, we'll take the book and you read it first and see what you think. And then if you feel like it would be valuable for your son or daughter, then share it with them. And in most cases, they will tell me they learned a lot in the book that they didn't know about.
Jackie, we'll definitely link in the show notes to your book. I think that will be a great resource to our listeners.
Wonderful.
So it seems like this idea of curiosity is a theme for you. The fact that you're so curious that it gets you to learn and optimize your situation over time. You kind of take your time and digest information it's such a positive thing. But I know we all make mistakes along the way. So what were some of the money mistakes that you made along the way and ones that you are trying to keep your daughter from making?
Okay, well, we know it's pretty hard. We would love to have our kids listen to us enough about our mistakes so that they don't make the same ones. But the reality of it is, I think, my daughter will want to make her own mistakes. But she did tell me her favorite letters in the book were the ones where I talked about the mistakes that I made. And I have made plenty. So a couple of them kind of stick out. When I was in college, barely making anything, even though I was working full time, I brought a new car. And my payments on that car was over $300 a month. And I was only bringing home about $900 a month from my work. So,
wow.
Yeah, that's kind of crazy. But of course, I wanted the nicest, newest car. And I go to and what makes it even worse, I go to the dealership. And I guess I had really nobody around me that kind of was helping me do this. I made the wrong assumption that you couldn't negotiate the price of a car if it was a new car. And of course, the car salesman didn't disagree with me. So I paid sticker price for the car. I financed it. I don't even remember what my interest rate was, but I'm sure it was high. I was only like 19 years old at this time. And the payments are $300 a month. So I only had the car for about a year before I realized this payment is choking me. I cannot make this payment. What was I thinking? So I wanted to see if I could refinance it. So I go to the bank and I sit down with this person that is looking at the loan on my car to, I guess, see what they could do. So they basically told me, we cannot refinance your car because you are upside down. And I didn't even know what upside down was. Now I know. And basically it meant that I was stuck with this car payment. And so it was just crazy. When she told me that, I was almost in tears at her desk. And so I just slithered on out of there, got in my $300 a month car and just cried. Like, I was so devastated. So that was something that I will never forget. So what did I learn? So I learned to not buy a new car. But I mean, I still like a decent car, but I've saved a lot of money since then on vehicles because of I'm much more strategic and I do my research now. But basically, I'm looking for the 3 to 5 year old car, 3 years, because, that's when a lot of cars come off of lease. So I'm looking at a 3 to 5 year old car. I do like luxury cars, nothing too fancy, but I want them to be 3 to 5 years old, somewhere in that range. And I look to get it for about 50% off what the MSRP was. And I keep my cars for a really long time, 7 years or more. The last car that I got rid of, I had it for 11 years. The car that I have now, I've had it for 7 years. To me, that's a great life hack to be able to buy your cars a little bit smarter.
I think that getting a car and then having it be upside down is a very hard lesson that a lot of us have learned.
Yeah, that was a tough one.
But, and I think it's something that a lot of us have learned, but I also think that ingrained in maybe American consumerism is that that's just how it is. And so people roll over those notes into their next car all the time. And it's
Wendy, I've had people to say, you'll always have a car payment.
Yes.
That's what I was told. Have you guys heard
all the time?
So that's terrible. All this misinformation. And that's why when I'm thinking about groups that I would like to work with, I love working with inner city groups, lower income groups that are normally not getting this type of information. So that's just a big thing for me.
But even with others who are not in that situation, there's this other thing that happened in your mistake, which is your assumption, and learning to check your assumptions earlier on and maybe do that little bit of research. That's the way to learn and actually proof your assumptions. That's a skill. And it takes knowing your thoughts, interrupting your thoughts, and then doing the research. And a lot of us don't. And then we end up with a mistake. I've made plenty.
That is so true. I mean, the other mistake that my daughter just loved me telling was the first year I got divorced, I needed to do my tax returns because my husband used to he either did them on TurboTax or something, but I wasn't really involved. So the first year I was divorced, I had to have my own taxes done. So I ended up going to this quickie tax place, probably at the mall or something. And the tax preparer, I guess he did my taxes pretty quick. And I only realized it was like 2.5 years later that I did the standard deduction, only from talking to other people and doing some research. He did the standard deduction with my taxes. He never asked me if I owned a home or if I should itemize or anything like that. So I realized And this was back in 2003, 2004. So back then, if you owned a home, that means with a mortgage, that means you were probably paying a deductible. You were paying taxes that were mortgage interest taxes.
Yeah, the real estate taxes.
Yeah, and real estate. In
mhm.
California. So real estate taxes. So generally, anyone with a home probably should itemize, right? And I was head of household and so forth. It baffled me why he didn't ask me those questions and had me do the itemized deduction. Now, there could be plenty of subtext in there. I don't know if he made some assumptions about me, but he never asked. And I kept whining and complaining to all my friends and everybody that I talked to that how awful he was and that he filed my taxes the wrong way. Well, I got sick of hearing myself. So I finally did a little more research and found out that you can amend your taxes up to 3 years after the year in which you filed. So I'm like, okay, I'm going to do that. So I had 6 months to get this done in that 3-year window. And I redid my taxes and I got back an additional like $2,400 from my taxes by itemizing them. And on top of that, because it had been almost 3 years, the IRS actually paid me interest on that refund that I was due. So I'm like, when?
What? The IRS gave you extra money?
They sure did.
Wow. So Jackie, one of the things that I was finding on your website is that you discuss the importance of having good credit and a good credit score. Why do you think that is important? And a lot of us are Dave Ramsey graduates, and that runs so counter to kind of what he puts out there. So I'd like to get your perspective on that. Why is it important?
Yes. And I myself am a Dave Ramsey follower. And I would say that in the present tense, because I think he is amazing with how many people he helps in regards to debt and credit. So he was probably one of the first financial experts that I listened to and started learning from. Being on the FI path, we do kind of take it to the next level. And so I have dug into the whole credit issue and that whole industry quite a bit to better understand and figure out the best way to do it. So when I do a presentation or workshops or anything like that, the number one topic is credit. So you cannot avoid that topic and you cannot just say, don't do it. It just does not work. When you're talking to a bunch of 18-year-olds or 20-year-olds, that's not the answer that's going to stick with them. They're not going to just not do it. So I figure, okay, I'm going to step back and I'm going to just educate them about credit. And so my strategy and my suggestion in terms of the right way to use credit is to, I usually list 3 things. You want to pay it off every single month on time. If you don't pay it on time, then pay it early. The second one is only use about 30% of your available credit. So those are things that I talk about. And the reason it's so important is because your credit will be looked at for a number of different reasons, not just to get a credit card. So if you are applying for a job, your credit might get checked. If you're getting insurance, your credit might get checked and it could determine your premiums or be part of how they determine your premiums. And this is something new, you guys, that I found out a couple of years ago. When you are going into the military now, they check your credit. It doesn't mean that they won't let you in, but that is a flag for them to say, here's what you need to work on. So because so many different areas in your life require a company or business to check your credit, it needs to be in good standing. And just because you have credit, like with a credit card, it doesn't mean you have to be in debt. If you pay it in full every month, then it's not debt. And realistically, because I work with so many young people, almost none of them are going to have the ability to pay for everything in cash. They're going to need a house, a car, things like that they are not going to have the means to pay for in cash. One day, they may be financially independent and they may be able to do that. But being a younger person, they are not. So credit is critical to make sure yours is good, that you know what's on there, and that you exercise the good habits to keep your credit in good standing.
And what would you say to maybe a young person who has already maybe made some mistakes and their credit is not in good standing? What are some tips for them to rebuild their credit and improve their credit score?
Okay, and I do talk about that a lot. It's typically the older people that have messed their credit up pretty bad and they want to know how they can fix it. The younger people are generally asking the questions about how do you get credit for the first time, because they're almost in the same boat, right? If they don't have credit. So to the person that may have a low credit score because they've made some mistakes in the past, mainly time will heal it. So the first thing I try to make sure is that they understand the credit score formula, and it is available everywhere now. Like, it's not a secret anymore. So I let them know the biggest part of your credit is, 65% of your credit are two things: paying your bills on time every single month and the available amount of available credit that you are using. Those two things account for 65% of your credit. So the main thing you can do to make it better is to start paying your bills on time. Even if you have missed payments in the past, you've screwed it up in the past, as time goes by, the old stuff, the bad stuff will count for less. And the good stuff, the good activities, on-time payments are going to start to matter more. Also, most people probably know this, but there could be plenty of mistakes on your credit report, and that could be part of the reason why it's low. So you want to make sure you pull that credit report and make sure everything on there belongs to you and that there's no question about it. If so, you can file a dispute. There's instructions online. The only website that you can go to get your free credit report that's sanctioned by the government is annualcreditreport.com. There's a lot of different sites and places that will claim to give it to you for free. If you have to put in your credit card, then it's not free. But if you go to annualcreditreport.com, they allow you to get a free credit report from all three bureaus once a year. And I usually will recommend this to the 18-year-old that is just starting out, because I don't want them to be on the car dealership, car picked out, and they tell them that there is something negative on their credit. They should already know with all the resources that are out there.
Right. That's a great tip. That was something that I used to practice bankruptcy law. And so part of my, closing out of the case with my clients where I didn't want them to be in that situation again.
Right.
So that website is a great resource, and you should go on it. Everyone should go on it at least once a year to check your credit, especially with not just to make sure that there aren't errors on it, but also to protect against fraud.
Oh, absolutely. That's a big one these days, is fraudulent activity that, could impact it. And it's, even though you can eventually fix mistakes that are on there or fraudulent activity, it takes some time to do that. And it's just better to stay up on it versus trying to clean up something that might have been screwed up for years.
Exactly. Well, everyone, we are nearing the end of our show. So Jackie, we ask our guests a few closeout questions. And so I'm going to go ahead and jump into the first one. Are you ready?
I am ready.
All right. What is one of your favorite life hacks that has either helped you save money or that brings you joy?
Okay, I think one of my best life hacks is to always save something. Even when I was in high school, I used to save a little something, even though I didn't have much money. So the key that I learned is to create the habit. So when I was younger, I used to save $2 bills because I thought they were special, and they really aren't worth much more than any other currency, but it started adding up and adding up. And by the time I was, out of school working, I had almost $3,000 worth of $2 bills. And so that was shocking to me. And of course, the $2 in savings turned into $20, turned into $200, turned into $2,000. So just creating that habit, because a lot of us will complain to say, I don't have enough money to save, I can't save. So even if you take a money jar and you put a couple dollars in there a week, you are creating the habit. And when you do improve your financial status and you have more money, you will already have that magical habit of saving and seeing your money compound.
I love that. Jackie, what are you reading right now? And do you have any takeaways for us?
Yeah, so it's kind of funny. I'm not a huge reader, but I do love to consume content. So I love podcasts, audiobooks, and things like that. So what I've been listening to now is a life story where the book has not yet even been written. So I listened to a podcast the other day. It was called The Learning Leader, and they had Coach George Raveling on there. And I'm not even a sports girl, but he was one of the first African-American college basketball coaches. And he has such an amazing story. He's in his 80s now, but he's done so much throughout his life. And the most memorable thing from his story that stood out to me was he was at the Martin Luther King Jr. I Have a Dream speech. And he was only there because he showed up early that day for this rally. And he was asked to volunteer for security because he was a pretty big, tall guy. And he said, sure, I'll do it. So he ended up standing right next to Dr. King as he gave that speech. And when he was done with the speech, Coach Raveling asked him if he could have that copy of his speech. And he gave it to him. So he still to this day has a copy of that speech, the original copy.
Wow.
And he's
oh my goodness.
Yeah, it's amazing. So he's so even beyond sports, many people might know him from his the days that he played basketball and then became a coach. But he has such an amazing leadership story about giving back and sharing your knowledge with people, being a giver and not a taker. And what we learn, we should not just keep it to ourselves, we should pay it forward. And that is what I want to do. But when I heard his story on this podcast, it was just so awesome. I mean, I think the podcast was over an hour. And then at the very end, Ryan Hogg, who's the host of the show, asked him, he's an avid reader too. So he reads all these books every year. So he was asked, why haven't you written a book on your life story? He's done other books about sports. And he was so modest. He just said, I don't think my life is all that exciting. And if I write a book, it's going to take away from the time that I have to learn more. So I thought it was pretty amazing. So the host said, okay, so many people will benefit from your book. We need you to write a book. And he's like, send Coach Raveling or tweet him or reach out to him and say, we want you to write a book. So I went on to Twitter and I wrote him a note and said, please write your book. But until then, he's got a great website. He's done many, many interviews, and he is just my newest hero.
I love that.
Yeah, me too.
It's how can you not have an incredible life if you were present for a speech like that?
Exactly.
Like how could you not? And it reminds me of I was listening to the Choose 5 podcast the other day, and Brad quoted that Jim Rohn quote where, you are the combination of, the 5 people who are most present in your lives. Yeah. And then the point that Brad made, and I just loved it, is like, we're so fortunate to live the time that we live in, where we have so much content and inspiration at our fingertips. So,
that is so true.
So the 5 people that are in my life are the podcasts that I listen to, the blogs that I read, so we have this incredible opportunity to just absorb all this information, and that's how we get influenced to do things. So then the final question is, how do people find you?
Okay, that's pretty easy. They can go to my website, which is moneyletters2.com. Or they can hit me up on Twitter, and I'm just at moneyletters2 on there as well. So tweet me. Looking forward to, communicating with you guys, keeping the conversation going. And thank you, Wendy and Tamika, for having me on today.
Oh, Jackie, it has been such a pleasure. Thank you for coming on the show.
Well, House of 5 family, that brings this episode to a close. If you've liked what you've heard, please subscribe in iTunes, as well as any of the other platforms you've found us on. We're on just about all of them. Also, please leave us a written review. They help us to know what you're liking about the show, what we can do better. And for every 5 reviews we receive, that's written reviews, we will give away one of our favorite reads, and that is currently Kids' Money Habits by Amy Coit. It's a great book full of great information, both for parents and kids. Don't forget to check out our show notes on the webpage. There is always bonus information there that didn't make it to the show, and we strive to create good content on there. So please head on over to the website and check that out. Finally, you can find us on Facebook. You can either like our page or you can become part of our Facebook group. It's a private group, and in there we have ongoing discussions about each episode as well as other topics within the FI community. It's a way for us to get to know each other better and for Tamika and I to learn exactly what you want to hear more of or questions that you have that we can address with upcoming guests. Again, thank you for listening. Come back next week. We're glad you're here.